Imagine a world where the demand for high-performance computing and artificial intelligence infrastructure is exploding. Companies at the forefront of this revolution could be among the biggest winners of the next decade. Applied Digital claims to be one of them. But is APLD stock a hidden gem? Or a high-risk bet that could crash and burn? Stick around because today we'll dive deep into whether this stock deserves a place in your portfolio. Hey everyone, it's Robert. Welcome back to The Alternative Investor. Today we're breaking down Applied Digital, ticker symbol APLD. With the artificial intelligence boom and a massive need for data centers powering advanced computing, Applied Digital has positioned itself right in the middle of one of the fastest growing trends. But does that mean the stock is a buy today? Let's get into it. At first glance, Applied Digital might look like just another tech infrastructure company. But when you dig deeper, they are designing and operating next-generation digital infrastructure specifically built for high-performance computing and artificial intelligence applications. They are not trying to compete with big cloud providers like Amazon or Microsoft. Instead, they are targeting clients who need heavy-duty, energy-efficient data centers built for specialized AI and machine learning workloads. Their facilities in North Dakota are already active and they have aggressive plans to expand as the demand for computing power skyrockets. Now before you jump in, it's critical to look at the numbers. Applied Digital stock is currently trading at around $4.56 per share. The company's revenue reached about $165 million in 2024, which represents a massive 198% increase compared to the prior year. That growth is impressive, but here's the other side. They reported a net loss of approximately $149 million. In other words, revenue is growing fast, but profitability is still a big question mark. So what does Wall Street think? Right now, analysts are largely bullish on APLD. The average 12-month price target sits around $10.67, which implies more than 130% upside from current levels. 9 analysts currently cover the stock, and the consensus rating is a strong buy. This optimism is largely tied to Applied Digital's unique position within the AI and HPC sector, a market that is expected to grow exponentially over the next decade. Applied Digital isn't just sitting back hoping the market comes to them. They are actively pursuing major strategic moves. One of the biggest initiatives is their planned conversion into a real estate investment trust, or REIT, which could optimize their tax efficiency and attract a whole new group of income-focused investors. They are also developing a massive AI-first data center campus in Ellendale, North Dakota. If completed successfully, this new site could solidify Applied Digital's leadership in building specialized data infrastructure for the AI economy. Selling options on APLD can generate income due to its high volatility. Sell cash-secured puts below the current price to collect premiums. If the stock stays above the strike price, keep the premium. If assigned, own the stock at a lower cost. Sell covered calls for additional income. The wheel strategy can turn APLD into a steady cash-flowing position. However, there are serious risks investors need to keep in mind. First, the company is still far from profitability. Losing over $149 million a year is not sustainable forever, even with fast revenue growth. Second, the digital infrastructure space is fiercely competitive. Big names like Amazon Web Services, Microsoft Azure, and others are already moving aggressively into specialized computing markets. Third, the transition to a REIT is complex and carries regulatory risks. Execution will need to be flawless, or else the strategy could backfire and damage investor confidence. So, should you buy Applied Digital stock in 2025? The growth story is compelling. The AI and high-performance computing boom is real, and Applied Digital is building infrastructure that the world increasingly needs. But this is a high-risk, high-reward play. For investors with a strong tolerance for volatility and a belief in the future of AI infrastructure, APLD could offer significant upside over the next several years. For more cautious investors, it might make sense to wait for clearer signs of profitability or successful REIT conversion before jumping in. Now, I want to hear from you. Are you investing in Applied Digital right now, or are you taking a wait-and-see approach? Drop your thoughts in the comments below. And if you found this breakdown helpful, smash that like button, subscribe for more deep dives like this, and I'll see you in the next one.